In the wild world of crypto, you see these massive price swings that just seem to pop up out of nowhere, right? One day everything's calm, the next, it's explosive. But what if I told you there was a signal, a hidden trail of digital dollars that could tip you off before the market makes a big move? Well, today, we're going to follow that trail.
I want you to just picture this for a second. You wake up, you check the news, and you see a headline like this one. The market has absolutely exploded overnight. Bitcoin just rocketed to a new all-time high. Now, everyone's scrambling, trying to figure out why. But the thing is, the clues, they were there the whole time, hidden in plain sight, right there on the blockchain.
So, what is this hidden force? How can we learn to spot these signals that tell us big money is getting ready to make a play? Well, our investigation is going to start with what you could call the lifeblood of the entire crypto economy.
Okay, so our very first clue, the thread we're going to pull on, it lies with a really special kind of crypto asset, stablecoins. You got to think of these as the digital cash that really fuels the entire crypto world. So what exactly is a stablecoin? Well, it's pretty much what it sounds like. It's a cryptocurrency that's specifically designed to hold a steady value. Usually, it's pegged one-to-one with a fiat currency, like the US dollar. For traders, this is an absolutely perfect tool. It's a stable, safe place to park their capital between trades. It effectively becomes the cash on the sidelines, just waiting to be deployed into the market. So why do people trust them so much? Well, it all comes down to a few really key traits. First, and most importantly, they work hard to maintain that stable one-to-one peg with a currency, like the dollar. Second, they're meant to be fully reserved, backed by real-world assets, like cash or very liquid bonds. They're also redeemable, meaning you can exchange them back for actual cash. And finally, because they live on the blockchain, every single move they make is transparent, lightning fast, and available 24/7. And here, right here, is the most crucial point for our investigation. When new stablecoins are created, and that process is called minting, it's basically the crypto world's equivalent of a central bank printing fresh money. It is a direct injection of new cash, new liquidity, into the market. And look, we are not talking about small amounts here. This is not a little trickle of cash, it is a full-on flood. Just take a look at this single event, $1 billion worth of USDT minted by Tether. Just like that, in an instant, $1 billion in fresh buying power is now sitting on the sidelines, ready to move. And that wasn't some isolated event, not at all. Circle, the company behind USDC, minted over $8 billion in just over 1 month. This is a massive market-wide influx of liquidity. But that just begs the question, right? Where is all this digital cash heading? By the way, if you're finding this breakdown interesting, do me a quick favor and hit that like button, subscribe to Digi-Gold, and share this with someone you think would find it valuable. It really helps us out.
And that question brings us to our next clue. We've established all this cash is waiting in the wings. But where's it going? To figure that out, we need to put on our detective hats. We need to become on-chain detectives and learn how to use the right tools for the job. All right, this is where we get to roll up our sleeves and get our hands dirty. We're about to explore a set of really powerful tools that let us analyze the data trail, the breadcrumbs left behind by every single transaction on the blockchain.
You know, the absolute beauty of the blockchain is its transparency. It really is a public ledger. Every single transaction is recorded and visible to literally anyone who wants to look. This gives us an incredible goldmine of raw data, allowing us to analyze what the market is doing directly without having to rely on news reports or opinions. We can see the facts for ourselves. Okay, our first tool is tracking something called exchange flows. And this is actually super simple. It's just the amount of crypto moving onto or off of centralized exchanges. It's one of the most direct signals we have for figuring out what traders are planning to do, like right now. And this breaks down into two really simple signals. You have inflows, which means crypto is moving onto exchanges. This strongly suggests that traders are getting ready to sell. I like to think of it as them loading the cannons. Then you have outflows, the opposite. That means assets are being moved off exchanges into private storage or cold wallets. That is accumulation, a really bullish signal that actually reduces the potential for near-term selling. Next up, we have to track whale activity. Now, a whale is just a crypto term for a wallet that holds a huge amount of a cryptocurrency. And because their trades are so massive, they can single-handedly move markets. So watching what they're doing, yeah, it's absolutely critical if you want to spot potential big moves ahead of time.
And finally, we get to what might be the most important metric for our case today, the Stablecoin Supply Ratio, or SSR for short. This amazing little ratio gives us a snapshot of the entire market's buying power. It does that by comparing the total value of all Bitcoin against the total value of all stablecoins.
So here's the easy way to read it. When the SSR is low, it means the supply of stablecoins is really high compared to Bitcoin's total value. Think of this as a huge pile of cash, or dry powder, sitting on the sidelines ready to buy Bitcoin. That's potential buying power. On the flip side, a high SSR means that money is already in the market. The buying power from stablecoins has already been used up. Okay, deep breath. We've gathered our clues, we've got the massive stablecoin minting, we're tracking exchange flows, and we understand the SSR. Now, it's time to put all the pieces of the puzzle together and actually decode what the market is telling us. This slide right here, this is our detective's cheat sheet. It puts everything we've learned together in one place. Just look at that bullish column. What are the signs we're looking for? First, large-scale stablecoin minting. Check. Second, high outflows from exchanges, which shows us people are accumulating, not selling. Check. And third, a low and falling SSR, which means buying power is high and growing. When you see this trifecta, this perfect storm of signals, the market is practically screaming at you that it's gearing up for a rally. So let me just state it as clearly as possible. When all of these signals flash green at the same time, it is an incredibly powerful indication that smart money, the big players, are quietly building their positions. The fuel is being loaded into the rocket, the buying power is building up, and the stage is being set for a very significant move upwards. But, just when we think we've cracked the case wide open, there's a final twist to this story. Is it possible that this powerful signal we've just uncovered is starting to lose some of its strength? This quote from crypto quant analyst Woo-Min Yu introduces a really fascinating and honestly a very important layer of nuance to our investigation. He suggests that while all these signals are still valid, the underlying liquidity engine of the market, it might be showing some signs of fatigue. What does he mean by that, a slowing engine? Well, deeper analysis shows that when the SSR hits a low point and then starts to bounce back up, those rebounds, they're getting weaker and weaker compared to previous market cycles. It's like a ball that's being bounced, but each time it hits the ground, it bounces back a little lower. This implies that the flow of new capital into the system isn't as strong or as sustainable as it used to be. And this, of course, leads us to a pretty provocative final question. If that buying power isn't replenishing itself as strongly as it has in the past, could it be that the next major rally signaled by these on-chain metrics, could it be the final big push for this particular bull cycle? And this, I think, is the most important takeaway from all of this. On-chain analysis gives us an unbelievably detailed map of the market. It shows us the highways, the back roads, and the paths that smart money is taking. But, and this is a big but, it's a map, not a crystal ball. It shows us the potential path, but it can't and it never will predict the final destination. It's a tool for understanding, not for fortune-telling. Thank you for joining me on this deep dive. Don't forget to like, subscribe, and hit the comments to let me know what you think. I'll see you next time.